that could be at least a few $100 million or even more. And the goal would be to find companies that are good, that have a viable business, and that are only struggling right now because of the situation we have in the broader economy. And their plan is to find the right place in the capital structure. And in most cases, it sounds like they will look to find debt-like instruments, which is higher up in the capital structure, which is secured, and which in most cases is likely to give you a decent amount of return, because don't forget, a lot of the good companies have seen the value of their debt, have seen the yield on their bonds go up significantly. The hope is when the market normalizes, when the economy normalizes, you will see those prices come back to us. And in the interim, anyone who's providing capital is likely to make good returns.
Finance reporter Sridhar Natarajan joining us from New York. Thank you very much for that. Let's now get a quick check of the latest business flash headlines. 2 independent directors, a struggling office-sharing startup, WeWork, are suing SoftBank, its biggest shareholder, for abandoning a bailout deal. SoftBank was to have bought $3 billion of shares from former WeWork CEO Adam Neumann, but dropped the idea in mid-March, saying certain conditions hadn't been met. The closing deadline for the sale passed last week. Jack Dorsey is devoting $1 billion of his stake in Square, the payment firm he co-founded, to help fund coronavirus relief efforts. He says the money will go to girls' health and universal basic income once the pandemic is under control. Dorsey also founded Twitter and is worth around $4 billion, according to the Bloomberg Billionaires Index, so his pledge represents around a quarter of his fortune. Hong Kong's richest man and his son have increased their stakes in the family businesses for the 3rd time in 2 weeks. Li Ka-shing and son Victor have been topping up their holdings in flagship CK Hutchison and in developer CK Asset. The buyout began in mid-March after both companies took big hits from the anti-Beijing protests in Hong Kong and then the fallout from the coronavirus. Coming up in the next hour, we'll have an exclusive interview with Nissan COO Ashwani Gupta on how the company is tackling the coronavirus fallout. This is Bloomberg.
Commodity investing is more than buying gold and oil. From coffee and corn to cattle and natural gas, many sectors drive the commodity markets. And the Bloomberg Commodity Index covers them all. With exposure across 23 traded commodities, Bloomberg is the standard for diversification in commodity markets. With full transparency, measure and monitor your investment performance against the benchmark used by commodity professionals globally. More than gold and oil. The Bloomberg Commodity Index.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Fuel, corn, livestock, precious metals. Commodities are everywhere. And so is Bloomberg. Bloomberg commodity indices deliver leading benchmarks for true diversification. Adding commodity exposure can help hedge against inflation and diversify your stock and bond portfolios. With full data transparency and broad distribution, the Bloomberg suite of commodity indices is your measure for the commodity markets. With Bloomberg, you've got the markets covered.
Welcome to Daybreak Asia. I'm Shirian in New York.
And I'm Heidi Stradwatts in Sydney. We are counting down to Asia's major market opens. Our top stories this hour. The coronavirus marches on, with the UK and New York State reporting their deadliest days yet. However, plans are underway to reopen the US economy in the coming weeks. Automakers are reeling from the pandemic as demand for new cars plummets and buyers stay away. We'll be hearing from Nissan this hour. But the city where it all began is getting back on track. China lifts travel curbs in Wuhan, ending 11 weeks of lockdown that disrupted the lives of millions.
Let's get you started with how markets are trading at the moment. We are seeing Kiwi stocks right now gaining ground. Of course, we had seen U.S. stocks under a lot of pressure today. There was a lot of volatility. U.S. futures continued to fall about 0.3%. We had surged as much as 3.5% in the U.S. session, but that really wasn't supported through the end of the trading day. Now, Nikkei futures also down 0.3%. This, of course, after Japan unveiled that 108 trillion yen stimulus package. We do have 7 prefectures that have declared a state of emergency. We do get core machine orders, current account balance, and the trade balance this hour. We have crude at the moment rebounding after falling to the weakest level since the start of the month, Heidi.
Yeah. Sherry, President Trump has threatened to withhold funding from the World Health Organization. He's been telling reporters at the latest coronavirus White House briefing that he's considering doing just that. And he also said that the nation may be getting to the top or getting on top of the virus curve. Let's get more from our senior Congress editor, Joe Sobczak in D.C. Joe, what's prompted this stance on what the president wants to do with regards to this WHO funding?
Well, this has been a complaint that has been rising with the president for the past couple of days. He was asked about some of the comments that he's made previously. At first he said that the U.S. would hold up funding to the WHO, but then later backtracked and said that they're going to just be looking at that, saying that they quote, blew it by failing to sound the alarm sooner about the coronavirus. And he accused them of being allegedly very China-centric for criticizing his decision to close down travel from China earlier on. So right now this is sort of on hold, but the U.S. allocates about $123 million to the World Health Organization, and this would be a pretty substantial chunk of their budget. But it's not clear that Trump plans to follow through with that.
Also a substantial chunk, what the president is asking Congress, another $250 billion for relief loans. This, of course, coming on top of the already costly as relief package of $2 trillion in the U.S. So could we see this new aid being passed anytime soon?
Well, at this time, the Senate has agreed that they will go ahead and do it very quickly by the end of this week. Both parties are very eager to keep this pot of money, which is directed to small businesses, those with fewer than 500 employees, operating, helping them keep payroll and avoiding laying off or furloughing their employees. Nancy Pelosi, the House Speaker, has indicated that she is in favor of adding to that, but she has not yet committed to meeting the request by the administration to get this additional funding passed by the end of the week. They could do this without bringing everybody back to Washington. by unanimous consent, but any single lawmaker could hold all that up, requiring senators and House members to come back to D.C. from their home districts because they are on break at the moment and still sort of dealing with social separation and avoiding travel. So we've got a few steps to go, but it seems very likely that one way or the other, Congress will do that.
Joe, we heard from Larry Kudlow on Tuesday saying that they were looking at potentially a time frame of 4 to 8 weeks in terms of reopening parts of the country and the economy. What could that potentially look like?
Well, there was some talk about designating areas as red or green. They could open up certain areas, allow essential personnel and perhaps more workers to go back to work in areas where the infection is subsiding. But that would require quite a bit more testing than what we have right now in order to accomplish. But it would be a piecemeal reopening of the economy as the virus continues to hit certain cities, perhaps later, and depending on what the statistics show about the rate of infection. The caution is, of course, that they don't want to have another flare-up. But the administration is very eager to get the economy moving again because right now pretty much everything has been choked off and unemployment could be as high as 30% at some point as we go along here. And they are working to see what they can do to make this happen.
Senior Congress Editor Joe Sobchak in D.C., thank you very much for joining us. Let's now get to the first world headlines. The UK has suffered its worst virus day so far, with the highest rise in deaths, and Prime Minister Boris Johnson remaining in intensive care. 24-hour fatalities rose by 786, taking the overall total above 6,000. The government says Johnson is in a stable condition, doesn't have pneumonia, and is not on a ventilator. He was taken to hospital on Sunday after spending 10 days in self-isolation. Italy reported the fewest new virus infections since March 13th as the government considers easing some movement restrictions in the coming weeks. Just over 3,000 new cases were recorded in the last 24 hours, compared with 3,500 a day earlier. Food and healthcare business may reopen by the middle of the month, and social restrictions could be eased if the number of cases continues to slow. Half the Japanese economy is entering lockdown amid a state of emergency and rising fears of recession. The government shut down 7 prefectures as coronavirus cases surge, with warnings that output may fall by as much as 20% in the current quarter. Prime Minister Shinzo Abe launched a stimulus package worth close to $1 trillion, as critics say he has been too slow to respond to the pandemic. China is lifting travel restrictions in Wuhan, the city where the coronavirus initially emerged. The city has been in lockdown for 11 weeks, with millions of people kept at home. Trains from other cities have already resumed services to Wuhan, and the move comes after China announced no new daily virus deaths for the first time. Final travel curbs in Wuhan will be formally lifted later Wednesday. Still ahead, an exclusive interview with Nissan. COO Ashwani Gupta shares his plans for dealing with the virus, along with the pre-existing and urgent need to recover sales and profitability. This is Bloomberg.
The box could be here. Ishel and Shakshal protecting the box.
yet another day of risk off across the financial markets. We bring you special.
Interview with the Nissan Chief Operating Officer Ashwani Gupta joins us. Ashwani, great to have you with us. First,
for us, most important is people. And as Nissan, we are making sure that our employees, our stakeholders are safe. And during this time, even we are not calculating the profit and the sales numbers, because we believe that once the sentiment, the confidence of our employees, of our customers will be back, the sales and profit will follow.
what about factory closures and disruptions? And you're closing your Indonesian plant. Can you explain how that decision was made? Why? And can we expect further factory closures to come?
I think in our principle of prioritization and focus about the Indonesia, the closure is not the end of the business. It is the start of the rebirth of Nissan brand in Indonesia. And we are getting into Indonesia with our original DNA of SUV and MPV, with the new SUV which is 6 and the Serena. And we need to serve the 300,000 customers which are driving the Nissan cars in Indonesia. As far as plant is concerned, yes, we do stop the plant for the time being. However, with this rebound strategy, we do hope that we will come back with the production facility in Indonesia.
When it comes to your U.S. business, Ashwani, we have seen Nissan now putting 10,000 U.S. workers and on furlough. You have called this a temporary layoff. Does that mean that you will be rehiring all of them after the pandemic is over?
Absolutely, and the plants are closed because we want the safety of the people first. And this is what we did in Europe. This is what we did in U.S. Now, we are following the regulation and the practices in each country. And in U.S., we have this provision of furlough, which means the workers can be at home and they are eligible to apply for the government support. On the other side, for having the people first, we are continuing our healthcare support to these employees while they will receive also the government support. This is what in US we call it a furlough.
When it comes to government support, is Nissan looking at ways of obtaining loans from governments, whether it's here in the US or in Japan?
I think today, for us, what's very important is people first, and number two is cash. Obviously, when we have closed the plants, our dealerships are closed, we don't have revenue, and in that sense, we have to manage our cash. And obviously, we are thankful to all the governments and the banks who are supporting us in running our operations in this difficult time.
What does the current environment then mean for the introduction of new models, in particular the much hyped Rogue?
The new models are the activists for our growth, and we are continuing our new model development because we do believe at once the people confidence, the customer confidence, and the market confidence comes back, we will be utilizing our new products and the new technologies to get the momentum once again in the business.
With all of the pandemic concerns, it feels like the sort of evergreen worries like Brexit have taken a backseat. But what are you doing to prepare for Brexit? And what lies in the future for the Sunderland site in England, given the absence of trade talks at the moment? Would you be looking at a closure of that site?
So basically, 1 month before, I had the opportunity to visit Sunderland. And Sunderland has a great history for Nissan. We are there for last 32 years, and we have produced more than 10 million cars in Sunderland. And out of this plant, we have created a new segment in Europe, which is called crossover SUV, with Qashqai and the Duke. We recently launched Duke, which is really doing great in Europe. So as far as Nissan is concerned, we are continuing with our regular business in Europe using the Sunderland plant. However, we as Nissan always follow the local business practices, and the impact on the Brexit could change the landscape we do the business in Europe. However, we do believe that anticipating the impact it can have on the automotive industry, knowing that Nissan is the biggest automotive manufacturer in United Kingdom, I do believe that the talks between the Europe and the United Kingdom will be business friendly condition for the auto market.
Ashwani, when it comes to managing cash for Nissan, we have seen you struggling a bit when it comes to issuing papers in September. We have seen some downgrades, raising the cost of capital for you. How will your balance sheet look if this pandemic goes for much longer than this summer or the fall?
All right.
Obviously, these all kind of circumstances are putting a challenge on our financial situation. However, with the support of our banks and the government support, we are continuing with our operational cash management. And we do believe with what's all happening today, it's challenging, but it's not impossible. And we are continuing with our regular operations under the strict circumstances.
Ashwani, good luck on that front. Thank you very much for joining us. Ashwani Gupta, Nissan COO, joining us on the line. Coming up next, Cowen CEO says M&A fears could clear up over the next quarter. More from our exclusive interview with Jeff Solomon ahead. This is Bloomberg.
Now I'm getting somewhere. This'll do. Almost done.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
The volatility index is now trading around its lowest level in a month amid optimism that global lockdowns are working to slow the virus spread. Cohen's CEO is among investors saying the most extreme market moves are behind us. Jeff Solomon told Bloomberg exclusively that healthcare and technology are the sectors to watch.
We've probably seen the most exacerbated moves in equity markets that we're going to see in terms of extreme volatility, in part because the virus was largely an unknown. Like, we didn't know about it, and we didn't know what the impact would be on March 1st of this year. And so when you saw the first really meaningful leg down, it felt like there was no bottom because, frankly, people didn't know what the policy responses were going to be. They didn't have an idea what liquidity was going to look like. And I've said over and over again, I think in times like that, people they look for the most liquid assets to sell so they can have cash in their pocket, and that happened to be equities in the early part of March. The bounce that we saw at the end of March is really a function of the fact that, stocks had fallen so far so fast that there was some technical rebalancing. And now I feel like, we're following the arc of the virus as the primary indicator. And that's, the news we've gotten over the past few days has been, I think, surprisingly upbeat, particularly as it relates to hard-hit areas like New York City. And as a result, the market is saying, okay, maybe this isn't going to be as bad as we thought it was going to be. And we'll see how that plays out. So all kinds of different reasons why equities move, but that's sort of my general sense as to what's happening now.
Yeah, Jeff, Romaine here. So if you're trying to sort of plan out a portfolio or just plan out any sort of dip buying, any sort of valuation plays here, how do you actually model that in this type of environment where even if you have a company that maybe looks good on the surface, when you don't really have that certainty or that clarity as to what the economic fallout or the longevity of this economic fallout is going to be, how do you model that?
Well, so I think people start are starting now actually to have the time to react to where long-term fundamental value is going to be. I mean, in the early days of any crisis where there's significant panic selling, it's hard to actually take the time during the course of the day to do the fundamental work because there's so many unknowns. But now we can kind of get an idea as to what we think, how deep the economic recession is likely to be. People can start to model that out as a worst-case scenario, a medium-case scenario, or not quite as bad. So I refer to those as sort of the L recovery, the U recovery, or the V recovery. There will be a recovery in here, and the question is, how far will that recovery be from where people had modeled out, steady state at the end of 2019? And once you start to do that, you can begin to discount the immediate impact of the virus and begin to look beyond into 2021 and 2022 of what those businesses will begin to look like from a cash flow standpoint. And once you start to do that, you can begin to try and ascertain where floor values are going to be in some of the more obvious areas. And obviously, we're seeing that in places like healthcare and technology and stay at home, anything that benefits from staying at home more. Those are starting, are going to be the areas that I think obviously have rallied first and will continue to show resilience in this.
So, Jeff, when the market bottomed, or at least temporarily, back in late March 23rd, I believe, there was this desperate need for cash among companies. They were just trying to access cash any way they could. We know that parts of the Fed's different programs that they've launched will take a while to get going, like the commercial paper program, for instance. But has it calmed nerves to the point where your corporate clients can access the cash that they need in a timely manner on manageable terms? Do you still see this desperate rush for cash the way we did at the end of March 2-3 weeks ago?
So I think two different things there. One is immediate cash to meet much more immediate challenges like making payroll versus long-term, am I financed correctly to withstand a prolonged economic turndown, or am I top line might be significantly lower than what I originally budgeted. And so as it relates to the first one, a lot of companies drew on their revolvers. A lot of our clients, certainly our private equity clients, portfolio companies, they know the first thing you do in a time of uncertainty is you hit your revolver and you try to get as much cash in your own hands as you possibly can. And certainly in the early days, the first week of March, maybe the second week of March, there was a lot of drain of liquidity in markets. And the Fed acted very, very quickly to pulling out a lot of the stops that, or a lot of the programs that we saw post the global financial crisis to get that to get liquidity back into functioning markets, which I think was a huge relief. People didn't have to worry about whether or not they were going to have cash tomorrow, and that was, I think, a huge relief across the entire platform. That's part of what drove, I think, the rallies towards the back half of the month, is that people felt like they could see that there wasn't going to be an immediate cash crunch. Now, as we progress beyond this, people are taking a look at and modeling out how they're going to be able to access these programs.
That was a Cohen chairman and CEO Jeffrey Solomon speaking exclusively to Bloomberg. Let's get you a quick check of latest business flash headlines this hour. The family that pioneered bargain shopping in the US has seen its fortunes reach new heights. This as the coronavirus pandemic raises value across global markets. The combined wealth of the Walmart siblings has risen to $165 billion. This as recession-wary consumers stock up on staples. Hong Kong's richest man and his son have increased their stakes in the family business for the third time in 2 weeks. Li Ka-shing and his son Victor have been topping up their holdings in the flagship CK Hutchison and in developer CK Asset. The buyout began in mid-March after both companies took pretty big hits from the anti-Beijing protests in Hong Kong and then the fallout from the coronavirus. Jack Dorsey is devoting $1 billion of his stake in Square, the payments firm he co-founded to help fund coronavirus relief efforts. He says the money will go to girls' health and universal basic income once the pandemic is under control. Dorsey's pledge represents around a quarter of his fortune. Coming up next, Japan enters a state of emergency, what it means for companies and the economy next.
This is Daybreak Asia. I'm Karina Mitchell with the First Word headlines. The coronavirus marches on even as some nations report an apparent slowing of cases. New York State reported its deadliest day yet as global cases topped 1.4 million with 81,000 deaths. White House economic advisor Larry Kudlow is striking an optimistic note, telling Politico that the U.S. economy may be able to reopen in the next month or so. He says plans are already underway for the post-virus world. Meanwhile, President Trump may pause U.S. funding for the World Health Organization, attacking its stance on travel bans and saying it failed to sound the alarm soon enough about the coronavirus. Congress allocated about $123 million to the agency this year, and the president slammed it for being what he called, quote, China-centric. The WHO urged against blanket travel bans, saying they've historically been ineffective. The International Labor Organization says the coronavirus is having, quote, a deep, far-reaching and unprecedented impact on employment, with potentially 1 billion workers at high risk of pay cuts or of losing their jobs. The ILO says lockdowns and shuttered businesses are affecting almost 2.7 billion workers, with hotels, food services, retail and manufacturing worst hit. UK Brexit negotiators want to resume talks with the European Union this month, despite the disruption caused by the coronavirus. Full meetings were halted last month after just one round, as the chief negotiators on each side showed symptoms. The UK continues to insist on a final deal by the end of the year, despite calls from the business lobby to delay the split because of the pandemic. Global news 24 hours a day, on air and on Quick Take by Bloomberg. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Sherry.
Karina, thank you so much for that. Let's now get a quick check of the markets. We are seeing Kiwi stocks gaining ground for a second session. We do get business confidence numbers later this morning. Kiwi stocks up 0.9%. U.S. futures reversing earlier losses, gaining 0.2%. It was a very volatile session here in the U.S. We saw the S&P 500 surging as much as 3.5% at one point, just to end the day in the red. Nikkei futures down right now 1%, despite the fact that Japan just unveiled a record 108 trillion yen stimulus package. In fact, Tokyo, Osaka, and 5 other prefectures in Japan entering a state of emergency. This as Prime Minister Shinzo Abe announces that record stimulus package. Our Japan government reporter Isabel Reynolds joins us now. Isabel, so what does this state of emergency really mean? Because it doesn't necessarily seem to be enforceable in a legal way.
That's correct, yes. I think there are things we know about the emergency situation and the things that we still are to find out. As you say, there are no legal teeth to this state of emergency in Japan. So Prime Minister Abe made a very emotional appeal last night to save lives by staying at home. And he said that he basically wanted all office workers to be working from home. But that's something that small companies in Japan have very little experience with and may not be set up to do. So that remains to be seen whether they will be able to comply with that and whether they will. The other part is that the state of emergency devolves a lot of powers to local government. So we're going to have to see what Tokyo Governor Yuriko Koike wants to do in Tokyo. And she said she'll say on Friday which businesses she's going to ask to close down. So that's another unknown element at the moment.
The biggest ever stimulus package, 20% of GDP, it's impressive in its scale. What are they hoping to achieve with it?
Right, yes. I mean, the headline figure is just amazing and enormous. Obviously, that isn't necessarily all new cash. That figure includes things like government loan facilities, which may not be fully taken up in the end, and also some private sector participation. But nonetheless, it is a big stimulus package, and it's basically divided into 2 phases. What Abe wants to do in the initial stages is basically to rescue people who have lost their incomes, lost their jobs, and small businesses that are going under due to the virus. So there are going to be cash handouts for households, cash handouts also for small businesses, and interest-free loan facilities. He's also going to allow a year's grace period for tax payments for some businesses. So that's the initial phase. What he really wants to do later on is to achieve a V-shaped recovery, and that's something that economists are casting a lot of doubt on whether it will actually be possible but he wants to apply stimulus to areas like tourism once the virus is under control and try and get the economy back on track.
Isabel, thank you so much for joining us. Our Japan government reporter Isabel Reynolds there in Tokyo, taking a look at that state of emergency as well as what we had in terms of that declaration of the state of emergency there. We are just getting a note coming through on the US set to block Iran's $5 billion IMF loan, a request to try and fight the coronavirus. That's according to reporting from Dow Jones. The US planning to block Iran's requested emergency loan from the IMF funding. Tehran says it needs that money to fight the coronavirus crisis. Senior officials in the Trump administration saying that the government in Iran has billion-dollar accounts still at its disposal. If allowed to access that IMF financing, officials say Tehran would then be able to divert those or some of those other funds towards its economy, which of course has been under sanctions. Lots more to come. This is Bloomberg.
Melinda Gates, thank you so much for joining us on Bloomberg Studio 1.0.
Who shaped my views were the women I talked to.
I think Facebook's probably won in a lot of ways.
Running Microsoft was a ton of fun, and it was, it's kind of inspirational.
This is your weekly review of the most important business news and interviews from Bloomberg Television around the world.
Yet another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Well, we are seeing those live pictures out of Wuhan, of course, what was the original epicenter of the coronavirus. And more than 4 months ago, we had news of this novel coronavirus coming through from the city of Wuhan, and that was quickly placed under a strict lockdown. We are seeing now the reopening some 4 months on, as the number of deaths in China from the coronavirus yesterday was recorded at 0 for the first time. There's been handfuls of new infections over the past few weeks, but most of them have been imported infections coming in from outside the country. You're looking at pictures there, vehicles queuing up for departure at the city border of Wuhan. Of course, this has been really one of, if not the most severely impacted cities in the world in terms of the disruption to its citizens. We're seeing the airport reopen, economic activity, activity of people on the streets still only at about 30% for Wuhan versus about 90% according to Bloomberg Economics for the rest of China. Well, after 2.5 months under lockdown, we are starting to see the city of Wuhan going back to normal. Let's talk more about this resumption to normal. Joined now by the co-founder and director of the Institute for Human Virology at the University of Maryland School of Medicine. He's also the co-founder and the scientific director of the Global Virus Network and one of the co-discoverers of the HIV virus. It's a pleasure to have Dr. Robert Gallo on with us. Dr. Gallo, thank you so much for joining us. As we see these pictures of the city of Wuhan slowly getting back to life, these travel restrictions being lifted, airports being reopened, we have to remind ourselves of the extraordinary level of surveillance and lockdown that Chinese cities place themselves under to get through to the other side of this. What does a reopening in the rest of the world look like in the absence at the moment of a widespread immunity and antibody test?
What does it look like? I mean, it's going to be variable, of course. It depends on the peak of the virus spread. and what you can rationally do in response to that. I mean, if it's still climbing up, of course, there has to be extreme caution. If it starts leveling off and coming down, some let up can occur. But I still think we are some weeks away where I live in the Washington, D.C., Baltimore, Maryland area. So this is going to vary country by country. And the great fear is if it hits the southern hemisphere hard, where where there is less infrastructure to handle this. That's what the big concern about. And also whether or not there will be another so-called wave of this while we do the letdown. I mean, it cannot be 100% sure. But we have no choice. I mean, as the virus looks like the infection is going down, we certainly have to start thinking of people coming back to function.
Yes, President Trump said today, just a couple of hours ago, that because of the elevated level of testing that's being done in the US, that's why so many new infections are being discovered in the United States. We also heard from Larry Kudlow saying that he's looking at potentially a targeted reopening in some parts of the country in about 4 to 8 weeks' time. Would you want to see antibody tests to take place before that happens? Is that really the next step? And how otherwise do you avoid the risk of introducing people back into the workplace, back into public spaces, and then risking that second and third wave of infections that we've seen in other places around the world that have been particularly successful at controlling that first wave?
Yeah, there's no way of easy predicting. You can see that yourself. I mean, any layperson can see that. There's no way of being absolutely sure. We have to come back at some point. We have to try. But we don't know if the antibodies are really protective or not. And as long as there's people who are infected, as long as there are people who are infected going about, then presumably if you have antibodies, you might be protected and you're in good shape. But that's not absolutely certain. It is, in my mind, critical to have antibody testing. But the antibody testing has to be developed at a high level because there's going to be cross-reactions with pre-existing coronaviruses that cause things like the common cold, which a few do already know. So you will get some cross-reactivity until we refine those antibody tests. That can happen. But, what can I say? What can anybody say? There's going to be a period where we have to start to come back when we see the fall in infection. And I think antibody testing is going to be critical to that, yes.
Dr. Gallo, can you hold on for a second because we have breaking news. Of course, we have more central banks really reacting to this coronavirus outbreak. Right now, we're hearing that the RBNZ in New Zealand is open to increasing QE in this rapidly evolving situation. Assistant Governor Christian Hawkesby giving an interview saying that they're very open to changing the size of the QE program. There's a limit to how much of a bond market moves of the bond market the RBNZ can actually buy, but they're urging banks to step up in corporate bond markets, and also they are open to increasing their QE. Going back to Dr. Gallo, thank you so much for hanging around. Of course, we have seen President Trump right now tout game-changer drugs, including hydroxychloroquine. Based on your expertise, have you seen anything that holds hope that we could get some sort of treatment out there fast and effectively?
The drugs that are available right now are not easy to predict are going to be so-called game changers. I don't think it's a bad idea for testing of hydroxychloroquine. I think that it's reasonable on the basis of what studies have been done in France and in China. But to think of it as a game changer, no, we don't have proper trials anywhere near enough to make an assertion that this is going to be a very major impact. Other drugs that are coming along are interesting. They're taking time to develop, and you can predict that in a short time there will be several other candidates that make perhaps a bit more sense. We have something that will be coming out very soon as a concept, an idea, and we think it's going to have a very real impact on the epidemic. It is just a few days earlier for me to talk about that, but it is related to a vaccine concept that could work very fast. So if you were talking to me next week, I would be able to talk about it more fully. So in summary, to answer your question, this is not going to be necessarily a game changer. It is something that may help and is worth a fixed trial, but not something that we can be sure of yet. I think there will be better drugs coming. I know of several possibilities that are coming, particularly for the bad late stage, when somebody's being intubated, when somebody's getting short of breath, in the danger stage. I think there are good ideas that are going to emerge and are being applied now. So these things are important to watch, and there'll be one after another developed in the coming weeks.
Dr. Gallo, are you talking about an adaptation of an existing vaccine? And if that's the case, does that mean that you can circumvent some of the earlier safety and efficacy trials that take so long?
Oh, you pinned me down. It's in that vein, yes. But I would like to go further, but I honestly, until another few days go by and we have proposals properly submitted, I think it's premature to go into more detail for me.
Dr. Gallo, what seems really interesting to me is that there continues to be this gap in research when it comes to these viruses. Of course, we have SARS, we have MERS. Why is it that we don't have more answers or more treatment and more vaccines for all of these ailments?
Well, first, it's not that easy, as you may think. But second,
we've had so many different instances. Why aren't we better prepared?
Yeah, well, you know, it's a reason. Post-HIV pandemic, that an idea that I had, and then developed with two European colleagues, one from Ireland and one from Germany, Billy Hall in Ireland and late Reinhard Kurth in Berlin, of forming a global virus network. So we established that it's now consisting of 53 centers of excellence in virology, covering every single kind of virus that can cause disease in humans, and in 32 different countries. Its president is Christian Brichot, who we recruited a few years ago for this. He was formerly the president of the Pasteur Institute in Paris. I think this is the kind of thing that is necessary. We have WHO, but WHO does not have laboratories. They know who to call upon. It's a necessary organization. But I think a global virus network, or GVN as we call it, has been long overdue and needs, by the way, the help and support of people. It's been sitting there since we created it in 2011. Well, let's say by 2013 it was really getting into more full development. Right, and that organization, right now, we can press a button and talk to experts in this or that virus all over the world. So about every 8 days, Christian Brichot will call for a conference call, and we'll have maybe 15, maybe 25 directors of GVN centers of excellence on the phone. So we get international, global information. A pandemic is it's everything, so everyone. So we need wider thinking and input from different countries, and not so much just preoccupied with ourselves. And I can tell you, I've learned so much by the interactions with this very pandemic from others, from people in China. China has GVN. We're not under any government deliberately, so it makes it a little harder financially for us. But it also allows Russia GVN to be involved, China GVN to be involved, and we can talk to each other, and and really exchange information by really top experts. This is something that needs to be furthered, and I'm glad you asked me this question, and I hope the answer helps people have some knowledge and appreciation of what this is about.
Dr. Gallo, thank you very much for joining us, and thank you for your insights. That was co-founder and director of the Institute of Human Virology at the University of Maryland School of Medicine, Dr. Robert Commendator. This is Bloomberg.
Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
All right, we are just getting some breaking lines when it comes to Standard & Poor's ratings on Australia. Australian outlook to negative by S&P. Australia's long-term foreign currency debt rating was affirmed by S&P at AAA. The long-term local currency debt rating affirmed at AAA. The outlook, though, changing from negative to stable. So we are just getting some more details. Of course, this on the back of the RBA conducting really extraordinary monetary policy as we see 3 packages now of increasingly substantial economic stimulus going to try and combat the impact of the coronavirus, and now we're just getting that Australian outlook cut to negative from stable by S&P. When it comes to the currency debt, it's affirmed at AAA negative from AAA stable. Sherry.
And Heidi, we do have breaking news out of Japan as well. We are getting core machine orders month-on-month, gaining 2.3% for the month of February instead of a contraction year-on-year, a contraction of only 2.4%, which is a beat on estimates. Of course, the expectation was for these machine orders to drop because of the coronavirus outbreak and having corporations cut investments. They did cut investments year-on-year, but the cut was a reduction which was smaller than expected. When it comes to the current account surplus coming in at 3.168 trillion yen, this is a much bigger surplus than was expected for the month of February. Of course, the boost to surplus, though, coming because of weak consumer spending in Japan. We have seen imports from China almost being cut in half, and this really leading to the surplus given the fact that we have weak domestic demand. So let's turn to Chris Anstey, who is our Bloomberg Asia cross-asset editor. Chris, what do you think of the numbers? Because it seems that the trade balance is also a surplus and much bigger than expected. Same with the current account surplus, better than expected machine orders, but perhaps not necessarily all of these numbers for positive reasons.
So I mean, the core machine orders picking up a little bit is perhaps a retroactive sign that the U.S.-China trade war, being put on pause in January, had some lagged effect there. The core machine orders, of course, kind of a key leading indicator for global manufacturing. And that number had come way down from 2018 until recently because of the trade war. Really got walloped. In fact, the level of orders shrank to the lowest since 2013. So we're seeing a little bit of a pickup thanks perhaps to a lagged effect of the end of the U.S.-China trade war. But as you say, going forward, it's hard to see those being a big boost to Japan given the impact of the coronavirus. And indeed, as you point out, shrinking demand here in Japan has led to the trade surplus and the current account surplus to widen a bit. That also just underscores why the yen has done pretty well recently. That surplus, of course, leaves Japan in a pretty good position from a funding standpoint.
Japanese stocks actually seemed fairly calm and sanguine about the emergency declaration. How are investors approaching this? Is there a sense that the impact will be measured because maybe Japanese stocks have hit a bottom already?
Well, there are a couple of things going on there with Japanese stocks. First of all, you had the valuation argument relative to others. They came into this crisis without the kind of high valuations that U.S. stocks in particular had. Second of all, we continue to see numbers in Japan for the coronavirus that are lower than elsewhere. And cutting against the emergency declaration, you've also got this unusual dynamic in Japan where the government can't actually order businesses and individuals to basically stay home and shut down. So it's not exactly clear how severe the emergency declaration will be and what the impact on corporate revenues and earnings will be. It's still a question mark.
Right. Chris Hansi, thank you very much for that. Bloomberg's Asia Cross Assets editor joining us from Tokyo. Coming up on the next hour of Daybreak Asia, Saxo Bank's Eleanor Cray joins us with her markets outlook, and we talk about the challenges and opportunities in distressed debt with SC Lowy CEO Michelle Lowy. The Market Open is next. This is Bloomberg.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.